Good afternoon, everyone. All eyes on CPI data and a little bit, some eyes on unemployment claims. Both data points coming out at 8:30 a.m. Going to be very, very interesting. So in today's video, we're going to be talking about what we can, really. We're going to talk about the stock market, the SPY, the NASDAQ, the IWM, the bonds, the dollar, and of course, do our best to be objective. All right. So without further ado, let's get started with the video. All right. So real quick, let's just go ahead and talk about the 30-year bonds real quickly. So, alrighty, so the 30-year bonds, we know that have a correlation to the overall market. So if the bonds are doing well, then we know that the overall stock market should also be doing well. So yesterday I was saying that obviously we saw that the bonds had a big red day. And the main level of support that we would need to hold was this zone between the 38.2% fib and the 50% fib. We never broke below the 38.2% fib, and instead we bounced back up. So this is obviously very, very strong. That's really all there is. So the other thing is that we could see that like the MACD momentum is falling lower, yet the price of the bonds are bouncing and continuing a bit higher. That is also strong. So you could see that this MACD is pointed lower, yet the price is higher. So usually when this happens, the price should also be falling lower, but this usually denotes a lot of buying pressure. But of course, you know, this entire video is really, really just hypothetical. There really can't be much that we could look at, okay? And I'm going to try to make this video as short as possible because there's not it's not really going to be a true analysis, okay? The only other thing that is worth looking at, in my opinion, are the dollar and the SPY. So for now, in yesterday's video, you would remember that I was saying I would be bullish, right? I was saying we should see at least 392.50, and we continued on even higher. And earlier during the day, I was saying that if we break above this high of 393.70, then we can continue going on higher. And that's exactly what happened. Once we broke this level, we dipped a bit back down to like 393. And then the entire rest of the day, we were just continuing to move upwards. And the reason for that was because this was a very major level of resistance, this high here, this wick upwards. And this whole setup, so imagine these two candles don't exist. So now this setup right here, that is a bearish setup. And people basically went short this setup with a stop loss at this high here. So I was saying that this would basically be a very, very good opportunity to rip to the upside because many shorts would start to cover. And that's exactly what happened. All right. So technically, from a technical standpoint, if we did not have CPI data coming out tomorrow would also be very bullish. So the way that this setup is, tomorrow should, so if CPI data was not coming out, tomorrow would have also flew, but because CPI data is coming out, it's truly like there's nothing that we could really guess about what's gonna end up happening. The estimates of CPI 6.5%. So if for some reason, imagine CPI ends up coming out at like 7% or something, that would make this whole bullish setup and all of the people that are just expecting CPI to cool off, that would cause the market to fall very, very dramatically. That would actually be very, very devastating for the market, actually. But most people are either expecting a flat move heading into tomorrow morning, so not a substantial move, or they are expecting a bullish move. So tomorrow should, like from sentiment, from what people think, is neutral to bullish. So yeah, it would be very, very surprising to see CPI data miss, and that would actually be very, very hilarious. But aside from that, you know, even the dollar, it's not really giving that good of a signal. But we do know that if the dollar is falling, then the stock market should be going up, and they have a bit of an inverse relationship. Okay, so this is still showing weakness by the dollar. We're holding support, yeah, but we aren't breaking above any levels of resistance. Until we start breaking up above these levels of resistance, it isn't an automatic reason to be bullish on the dollar or bearish on the stock market. But today we didn't really get any we didn't really get much help from the dollar here. The bonds were the only thing that kind of helped us here. So honestly, I don't want to drag this video out longer than it has to be. To recap, the bonds are showing bullishness. The overall market is also showing this is a very, very bullish setup. And the dollar is still continuing to show weakness. It's not showing strength. So there's multiple reasons to be bullish on the market. But because we have CPI data coming out tomorrow morning, all of that gets thrown out the window. And it truly doesn't mean anything. So if CPI data did not come out tomorrow, this would continue going on higher, in my opinion. Because from this move here, we were bullish here. And after that, it should last basically for at least a retest of 397.50. So, you know, that's if CPI data didn't come. But since it is, there's no guarantee. But yeah, so I hope you guys enjoyed today's video. Make sure to like, comment, subscribe, do all that good stuff. And I will see you guys bright and early tomorrow. We made a lot of money over the past few days on the stream. We are doing really, really well on live stream. And it's doing really, really well in general. So I hope you guys enjoy everything. And yeah, love you guys. Take care.